Ladies and gentlemen, we are back. Welcome back to another video on selling puts and calls. I've been documenting me trying to do so and make some extra income and just see if I can make that work. And I wanted to share this with you guys because I wanted it to be as real as possible and not try to feed you any BS. If that sounds cool, please consider subscribing. That way you don't miss any videos in the future. In the last 2 days, I've been selling a lot of options. I've been buying the closed sum as well to free up some of my capital. And I want to talk about something I've been doing lately that might come back to bite me. We're going to experiment with it and just see if we can make it work. And lately, I've been selling some calls on our favorite stock, Sofi. And really, it hasn't been that many calls. I sold 3 calls that are currently in the money. This one right here, the $16 strike Sofi call, I sold 3 of them, sold 2 of them today actually, but before it surpassed $16 a share. And of course, right when I did, Sofi shot up. It seems like everyone seems to know when I sell a call. And this is one of the risks, by the way, when selling a call that no one seems to talk about, which honestly, in my opinion, isn't that big of a risk because you're signing up for something up front. But when you sell a call, you limit how much your potential gains can be. For instance, I sold this $16 strike call option, which means if it's in the money come expiration, I will have to sell 100 shares of Sofi at $16 a piece. And I'm okay with that. I signed up for that. I knew what I was getting into. However, Sofi is currently going for $16.29. So I'm missing some money because I'm selling it for less than it's actually going for. It's basically like I took the premium that I was given when I sold this call and I gave someone a coupon. I said, hey, if the stock goes above this price, you can use this coupon and get this stock for this amount. It's kind of like a sale for the buyer. And so yes, you know what you're in for if it does get in the money. I know I'm going to sell at $16. It's not going to be a surprise, but you do miss on the potential gain from the underlying asset. If you go to my trusty spreadsheet, which I keep track of all of the options I sell, and there's been a lot of entries lately, you can see in the past 2 days, here are all of the options that I've sold. Whether they're calls or puts, that's what's denoted in this column. And over those past 2 days, I have made $345 this far in premium. And I say thus far because I might have to buy to close some of these, so the premium might go down in total. And you'll see line 45 here. This was actually 2 calls that I sold, so they're $20 a piece in premium that I sold today, expiring tomorrow, strike price of $16. Those will likely become assigned if Sofi maintains the price it's at today, and I'll lose 200 shares of Sofi, or not really lose, I'll sell 200 shares of Sofi from these 2 calls I sold. Something else I've been doing is I've been running the wheel on SPY, and I acquired 100 shares because I sold a put on SPY at a strike price of $605. Those got assigned, and I bought 100 shares of the SPY. And for a while, the SPY hasn't recovered. So what I've been doing is I've been selling calls under the price that I acquired those SPY shares. And these have been 0 day to expiration calls, meaning they expired the day that I sold. And I did them pretty far from the going price of the SPY. And I've been trying to make some premium that way. And then if they get close to the strike price of the call that I sell, I will roll them into the next day at a higher strike price. And so far this has worked. It might backfire on me in the future. I've been making some money from the SPY, holding those shares, and then selling calls lower than my acquired price. That's probably not a great method, but I'm just kind of testing it to see if I can make it work. And then if worse comes to worse, I can just roll it out at a higher strike price and just try to play the waiting game. And so you can see yesterday I sold a call that was expiring today. I made $64 in premium and the strike price was $596. And this ended up not getting assigned. And I ended up buying to close this call for $3. Now we can see the total profit, premium minus the cost to close, is $61 from selling this call. And I'm going to keep trying to do this and see if I can make it work consistently. Of course, I'll keep you guys posted. I just thought it would be something interesting to try out and see if I can make some extra money while I hold onto the shares of the SPY. And it looks like a lot of the options that I sold that are expiring tomorrow are going to expire worthless. So I'm going to free up a lot more capital for the next week so I can go ahead and continue to sell more puts into next week. But that's basically it. If you like this kind of content, like I said, consider subscribing. If you want to purchase a spreadsheet and help out the channel, it'll be linked in the description below. And I really appreciate you guys watching, and I hope to see you in a future video.